Hi, this is Sarah Mikesell with the Pig site, and today we're here with Mark Schweitzer. He is the Vice President of Global Economic Research with ADM. Thanks for being with us today, Mark.
Thanks, Sarah, for having us. We greatly appreciate the opportunity to talk a little bit about our world and what we see in our space.
Very good. Well, it's nice to have you on today. And let's dive right in. We're just coming off of World Pork Expo, right? And it was really no big secret that when we were there was lots of talk about the economics of the pork industry right now, and that it's really struggling. And at World Pork Expo, ADM hosted a business seminar that was focused on the economics of the swine industry right now. Can you share some highlights from that event? I wasn't able to attend it, but it intrigued me because this was such a hot topic when I was at the show, and I was just wanting to make sure that we captured some of that content. Even though we don't have the experts, we've got you who were participated in the event.
Yeah, absolutely. Great question for sure. You know, it was really clear. The main topic of conversation, no question, was the current state of the economy in the pig space. You know, and you kind of look back on it and you think about the years of expansion across the space in the U.S. market of being oversupplied in the industry, coupled with, you know, slowing demand, slowing economies, rising costs, new regulations. It's been a real tough road for the producers, and certainly that whole value chain of issues that we've seen and continue to see was discussed, and the impacts of that market. I thought Dermot Hayes had a really interesting slide from Iowa State. You know, he estimated Iowa hog returns for farrow to finish for this year, and he also did a little bit of a forecast when he ran it out through 2024. But you know, we have matched, unfortunately, the lows that were made in 1990. And his forecast for the margin structures actually go out into early 24 with projected losses. So, and it feels like maybe the worst, you know, the $60, the $55, $60 per head loss of that central Iowa maybe is behind us a little bit, but certainly we've got a tough road ahead of us as we head into 24. So that was the key conversation, no question.
Very good. And as you said, maybe we've hit a bottom. Was there also discussion about what the rest of the year may look like for producers?
Yeah, a lot of people were talking about, you know, what do we think about for the forecast? And again, when you think about, you know, where we're at today and where are we going to be, it certainly feels that it's going to take the industry through 24 to right size. In other words, to get the supply at equilibrium with demand, it's going to take some pretty severe actions of reduction of inventories, somewhere 5-6% yet to go, and reductions in sow sizes to kind of get us to that equilibrium point. So you think how long it's going to take to clear those stocks, it's probably, you know, it rolls into 2024. So right. We got a little bit more to go through, it feels.
And one more follow-up question. This is something I heard at the show, is that this is a cyclical thing that the industry has to go through, right? As you said, maybe a little bit of oversupply and time to right size. Was that the general consensus of your speakers, that this is a cyclical thing and the industry will get through it like it's done every other time?
Absolutely. You know, and it's so easy to focus on the headwinds and to talk about the obvious. And, you know, we talked about too much production. We talked about, you know, the uncertainty of the U.S. weather, which maybe doesn't lead to lower feed costs because of the dryness, the acute dryness that's happening, and the uncertainty in the commodity markets that we've seen in the last 10 days, and in the higher prices. You know, the complexity of China trade and tariffs, U.S. interest rates, a slower economy, you know, in the U.S. and globally, federal and state regulations, like, you know, that we're seeing pop up, and of course the Ukraine conflict. Those are all headwinds that we're facing, and it's easy to get focused on those and to say, hey, boy, there's no end in sight. But you know, when you go back and you look at some of the data that happened in 1999, and we were down in that $50 and $60 a head loss on the farrow to finish, and it's easy to get caught up into that. But I would say, look, you know, one of the positives, one of the real big tailwinds that we tried to focus on is if a producer controls, you know, pays attention and controls the financial health of their balance sheet, and they're quick, you know, on the trigger to delay any expansions or any renovations, and they right size their business accordingly to the demand that they're seeing, you know, that is key to being able to get through this downward cycle. Because, you know, everyone's talking about 1999, but what came after 1999? We had some really good years that followed, and it sure feels that once we get this market right sized, that we'll be able to have some tailwinds for the producers and get into that plus 30 and plus 40 a dollar a head farrow to finish down the road. And certainly, I think one thing that's really interesting that we didn't talk about at that, but I talked with a lot of people afterwards, was, you know, when you look at the beef cycle is in total opposite of what's going on right now with the hog cycle, which is extremely rare, right? Beef prices go up, we're getting compressed on the hog side. But, you know, I guess it was at the beginning of the year, the USDA came out and said we're at a 61-year low. We haven't been there since 1962 in our hog herd, our lowest hog herd in 61 years. Well, that's probably a good thing for our space in the pork, because if we keep beef prices higher, that kind of helps us as we rebound to be able to support, you know, higher pork prices too. So look, I get the headwinds, and I know we all have to make sure that we right size, and I know it'll be managed that way. But the tailwinds are coming, and after 1999, there were some really good times in the space, and that's what I'd like to, you know, kind of leave with and focus on.
Very good. And you started to talk about this already, but I'm going to ask the question anyways. My follow-up question really is, you know, you talked about producers needing to downsize. What are some of the other things that producers could do right now, today, or in the next, you know, 30 days or 60 days, to ease some of this economic pressure that they're feeling?
Yeah, absolutely. I mean, they're all the experts. They're paying attention to their rate of gains. They're paying attention to their feed costs. Certainly, if I'm a producer, the one thing I'm looking at is renovations, or where people still talking about renovations and how they're thinking about, you know, going forward. Certainly, any kind of delay in any capital, you know, expenditure is probably prudent at this time. You know, that's a big one. You got to keep that financial health of that balance sheet in shape, and your, you know, your debt ratios low, because you want to make it to that next cycle. You want to make it to where you beat the trough and you get up and you start to get the tailwinds, and then you're into that $30 and $40 range. And anything you can do to preserve that financial balance sheet. Each operation is so different. It's hard. It's almost limitless of things you can do. It's just you have to fit those exposures to your operation.
Very good. Well, Mark, thank you so much for all the information today. I really appreciate it.
Sarah, thanks a lot. And we sure appreciate you and all of our customers out there. And we couldn't do it without you. So thank you.
Very good. This is Sarah Mikesell with the Pig Site.